I think it's pretty much expected that we're going to get the rate rise coming through. So the attention's going to be focused on any shifts in terms of the forecasts for 2021. So I think there's going to be a lot of interest on whether we get any move in their long-run estimate for the natural rate of unemployment. And also whether they're going to forecast that the unemployment rate can continue to go sideways at 3.5% by 2021. I think that's likely that they do forecast it going sideways over the next few years, but I think that's really where the key uncertainty is. In my mind, it's more likely that the unemployment rate keeps falling and that builds inflation pressure and keeps them on a hiking path.
Well, isn't that the ultimate risk? We talk about trade and tariffs. Costs may go up, but at the same time, if that happens, the economy could slow. So now you've got the situation, Mike, where maybe in a year or so, costs are up, but the economy is slowing down. Is that a positive scenario in any way?
No, I think that clearly makes it very difficult for the Fed if you get a slowdown in growth coming through, which I think is going to happen anyway. But certainly that could be exacerbated if you get a further escalation in the trade tensions. But that would be inflationary as well. So that makes it a very difficult environment for the Fed. I still think, though, when you look at the strength of the US economy at the moment, you look at the consumer confidence data we had out recently, showing that the US economy is just booming, and with the unemployment rate as low as it is at the moment, I think that the Fed are going to tend to just keep hiking rates probably at a quarterly pace till they get rates to at least 3%. And then they might stop and pause and assess the outlook from there. But I think that they're still on a hiking path for at least the next few quarters.
I guess here's what matters, Mike. Can the U.S. economy handle a 3% Fed funds rate?
I think that by the time you get to 3%, so in about a year from now, that's going to start to look tight. So monetary policy is going to have gone from being accommodative to all of a sudden starting to be on the verge of being tight. At the same time, as we head into 2020, there's this risk that the stimulus that we've currently got at the moment coming through on the fiscal side turns into a little bit of a drag. So I think the US economy should hold up pretty well over the coming few quarters, but the risks start to build once we look beyond the end of 2019.